The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Let's get to our stock of the day. So I'll be honest, there's not a whole lot of corporate news out there. There's that takeover for National Storage REIT, but looks as if that's a foregone conclusion. So I thought I would take the opportunity, given what we just discussed, to ask my guests if they've got a stock for 2026. I know you'll be interested, so not a big preamble into this one. I will start with eeny, meeny, miny, mo, you, Andrew Coleman from Team Invest. So I know it's difficult to say one stock for 2026 because, as you say, 12 to 18 months will all be proved either right or wrong, one way or the other. Circumstances can change. But what's a company that you feel confident that 2026 will continue to be a good year or will begin to bring, more fruitful opportunities?
Great question. And as I think we spoke about before this, I'm very nervous of going out on a limb on this because you don't normally invest in only one thing. You have a portfolio for a very good reason, which is that, certain projections are proved wrong just by reality or changes in reality rather than anything wrong with your thesis. But if you ask me right now, what's a company that I think is going to have a very good 2026? My answer is going to be REA Group. And that's not one that you and I have spoken about a lot this year. And my reason for that is simply, if you look at the numbers, REA Group continues to deliver 30% plus return on equity and return on capital. It's been growing at high double-digit growth for the last decade with very high stability, has almost no debt on its balance sheet anymore. It's paid it all off. And yet, as you can see in that chart, the market's just got cold. In the same way we were talking about before, the market ran the PE up to a stupid number over the last few years, getting excited about that growth. And now I think it's just stopped being talked about. I mean, we used to be a few years ago on the call, REA would come up every week. REA hasn't been up for a while. That just simple lack of focus has taken some demand out. And at $190 a share, it's not cheap, but it's starting to look like a pretty good investment again. And so from that point of view, I think all the fundamentals are right. And I think that price is now coming back towards a more reasonable number. It's a PE of 44, which is still ridiculously high in long-term terms. But compared to its average over the last 10 years of around 60 times, 44 is starting to look at the better end of that cycle. Okay,
I'm not going to call it value, but relative value perhaps. You're not concerned at all about CoStar coming in and shaking things up here in Australia? In its bid for domain, I should say, for those playing at home?
I mean, look, all competition has an effect. I think, though, if you look at where the moats for REA are, it's going to be very hard for CoStar to affect its economics in any short term. I mean, REA dominates the space in a way in which it will make it very hard for anyone, whether they come in with a low-cost model or they come in with trying to provide a better service to eat their lunch quickly. Now, that's not to say CoStar can't get it right and over time damage REA's economics. But I think as we were talking about the market getting ahead of itself, I think the market's already factored that in to a large extent. It's assuming that REA's growth will drop off, margins will decline. And as the ACCC has pointed out, REA seems to have such high level of pricing power, they can even be accused of potential price fixing, which says it's going to be pretty hard for a competitor to eat that lunch quickly.
Got it. All right, Zach, you may give a comment, an endorsement on the REA pick or not.
No, we like REA. Okay. I think part of one couple of interesting points about REA. If you follow all the global online marketplaces for homes, they've all been very weak. I was actually updated the chart just recently. The one in Sweden, Rightmove, and so it's very interesting. There's something happening there. Now, I think some of them are stock specific as well and market specific, but all of them have been weak. And I think part of the story is also quality's lagged. Cyclicals have really come up. And so I think you're right. I mean, no new real news on REA besides valuation. So we like REA. The question for us is quite simple. In 5 years' time, would we want to own REA? Yes.
Okay. Got it. Now, what? Come on, you've got to give one as well.
Yeah. Now, look. In terms of, we're still getting our thoughts together. But Lovisa, and so look, the way we're trying to look at the market is because we think there's uncertainty in the next 6 to 12 months. We're looking for stocks with high ROE and high return on invested capital, right? And so one name that's sort of popped up recently is Lovisa, and it's also popped up because it's had a bit of a share price correction. And I think because it's done so well over a long period of time, I think the run rate, the growth rate, the trading update was slightly below expectation, but nonetheless it was healthy. The reason why we like this is I think its return on investment capital is almost 30%. So every dollar invested into its business, it gets a return of 30-odd%. So that's the kind of business we like. Its cost of capital is low. The other important point is, and I'll kind of tie it into Premier Investment Group, which came out recently with a downgrade. This is kind of an average buy price of $10 to $20, right? Whereas the other guys are premium. So this is a stock that is certainly in our bucket for next year as to what is going on. If there's still pressure on family budgets and whatnot on the consumer, this may still hold up okay relative to someone like Premier Investment Group, who we actually like.
Yeah.
And what we're really determining with Premier Investment Group, honestly, if it's a bit more structural versus in terms of whether issues in Smiggle is moving on to Peter Alexandria as well. But bottom line is, Lovisa looks very good because of that.
Thank you. All right. So a bit of a different flavor today, but our stocks of the day being REA Group and Lovisa.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.